In this presentation, we will take a look at multiple choice questions related to CVP analysis, cost volume profit analysis. We'll go through the questions and then we will practice test taking skills with them. First question, tool in predicting the volume of activity, the cost to be incurred, the sale to be made, and the profit to be earned is A, future income analysis, B, cost volume profit analysis, C, projecting, D, comparative analysis, and E, CVP analysis. Let's go through this again. Use the process of elimination. Tool in predicting the volume of activity, the cost to be incurred, the sales to be made, and the profit to be earned is future income analysis. That sounds kind of right, so we might keep that for now. B says cost volume profit analysis. That's like the name of what we're doing, so we're going to consider that might be an answer. And note that would be more obvious if we're talking about a specific area where we're concentrating on cost volume profit analysis. But if we're talking about managerial accounting as a whole, and you take a step back and zoom out and you saw this type of question in a larger context of a larger exam, it might be less clear. But clearly, we're focusing in on that, so that's going to be a question for us, or one of the potential answers. C, projecting. Now, again, it does sound like kind of a projection. Notice that A and C sound similar. I'll keep it for now. Comparative analysis. Again, that sounds like something we're doing here. We are doing a comparative analysis, but it's not really the name of what we're doing. So I'm going to cross this one out. And E says CVP analysis. And that might sound familiar, so I'll keep that for now. So let's go through it again, and we'll use the process of elimination. Tool in predicting the volume of activity, the cost to be incurred, the sales to be made, and the profit to be earned. So the first one is future income analysis. Now between all of these, future income, B says cost volume profit, C says projecting, A and C sound pretty much the same, and neither one of them is kind of like the normal name that we know of. So I think for that reason, I can cross out A and C as kind of the same type of thing. B is the one is a name that I really recognize, and E sounds like the initials we really recognize, CVP analysis, and this says CVP analysis. So that B is not what I would expect. I would expect it to be CVP, and if they were both the same, then we would be talking about the same thing and could eliminate them. But the fact that this is a B and not a P means that it's probably not E, and therefore we'll go with B. So cost volume profit analysis, final answer. Tool in predicting the volume of activity, the cost to be incurred, the sales to be made, and the profit to be earned is B, cost volume profit analysis. Next question. Which of the following costs is variable? A, rent, B, salaries, D, depreciation, or C, depreciation, D, direct materials, and E, overhead. Once again, process of elimination. Which of the following costs is variable? A, the rent. Rent is something that's typically going to be the same each time period, and so we would probably consider that to be more fixed. No matter what we do, we got to pay the rent. So that would be probably the most common example of a fixed cost. And then B says salaries. Again, salaries, by its definition, means we're going to pay the same amount each time period. Doesn't matter how much we make. If you're talking about the supervisor, doesn't matter if the supervisor, he or she even showed up to the job, they're still going to get their salary, right? They're going to get their salary. So we're going to say B is fixed, not depreciation. Depreciation is something that we calculate, and it's usually, again, it's just based on it is what it is. We're going to calculate the depreciation. Usually it's going to be just a fixed amount. Doesn't matter how much we produce, usually, unless we use kind of units of production method, but typically normal straight line type depreciation is usually going to be fixed. Direct materials, that's something that we would normally think of as our primary variable cost. So that's when I would definitely think variable, because obviously as we make more stuff, the cost of the materials is going to change with relation to the stuff we make. And then E says overhead. And overhead is one that it may have fixed or variable components to it, but note that's more of a managerial accounting term for It's not really a CVP term because we're breaking stuff out here not by its function or what it's used for, overhead being part of the production that we can't apply to the job or process. Here, we're breaking it out between fixed or variable. So one, overhead isn't a term we typically are considering in the CVP analysis as clearly we're trying to break out, and two, it could have fixed or variable components to it, even if we were to consider it. Therefore, it's not overhead. The direct materials looks like the answer. Final answer. Which of the following costs is variable? D. Direct materials.